Can you believe we are already a quarter of the way through the 21st century? I mean, it's incredible. Can I teleport you back to the 31st of December, 1999? And Jules Holland's hootenanny was counting us down to the new millennium. I wonder back then if you set some kind of financial goals or objectives for where you might want to be by 2025. If you're anything like where I was 6 or 7 years ago, today you might have a bit of a gap between where you thought you'd be or wanted to be and where you actually find yourself today. And for me, the new millennium did not get off to a great start. In 2001, we had the dot-com crash, and I went to see my wealth managers for my annual review, and it turns out they had lost me £180,000 in 18 months. And then they took me into a little room and said, "Mr. Rowan, unfortunately, these losses take your net worth below the level at which we look after clients, so we're going to have to let you go." So I got fired by my own wealth manager for the losses they had made in my portfolio in 2001. Now, I was already in my mid-40s, so I was thinking, I've got to somehow find a way of catching up and making good this kind of gap. So I was going into all kinds of weird and wacky things. I was into forestry, I was into care homes, I was into bonds and loan notes, I was into FX trading, and some of it worked and a lot of it didn't, because I was trying to catch up by getting above market returns. And then eventually, I kept my curiosity, I kept looking, and eventually I found direct private equity investing, where you become a shareholder in fast-growing companies, and that's what's been able to move the dial for me to get me from a low 7-figure net worth to an 8-figure net worth in a 5 or 6 year period. So all I can do in this short talk today is give you a few examples of the sort of things I've been doing and see whether it's interesting enough for you to take a bit more time to look at in a bit more detail, because we are living in a very challenging decade. I mean, this is my 7th decade, and apart from maybe the 1970s, I certainly can't think of anything else that's as challenging, especially for people like us. The very fact that you're in this room at this event suggests to me that you are way above average. Average in terms of your success in life, in terms of your income, in terms of your net worth. You are above average. And therefore, you actually face the biggest challenge. So for example, at the moment, every morning we have to wake up and ask ourselves, which Donald Trump are we getting today? Are we getting the peacemaker or the warmonger? Are we getting tariffs on or off or back on again? Does he love Europe or hate us? Will he protect us or walk away? Who knows? How do you make investment decisions against this kind of backdrop? And we have an even bigger challenge closer to home with Rachel from accounts. People like us are target number one for Rachel. And she has got all kinds of other ideas for how she's going to shake us down with wealth taxes and exit taxes and unrealized capital gains, whatever. I think her role model is Harold Wilson's Labour government from the 1960s, where taxes peaked at 98%. So you ain't seen nothing yet. There's a lot more to come. And you know what? If she was serious about triggering growth in the UK economy, why isn't she here today at this event? Because she might actually learn something. Instead of asking the regulators how to get growth, all they know is how to get in the way. She should be here looking for companies that are growing fast. Now, we're told by the Bank of England that this is a benign inflation environment. But the reality is, in the last 5 years, inflation's been nearly 37%. So if your portfolio has gone up by less than 37%, you are poorer today than you were at the start of this decade. Now, I think most of us have an appreciation of how inflation eats away at our wealth and our purchasing power, but far fewer of us are aware of the impact of growing the money supply. And you know what politicians do? They keep printing money and all that kind of thing, and the Bank of England buys their bonds. That is actually also debasing our wealth even faster than inflation. And in the UK, the money supply has gone from 82 billion in the early 1990s to 2.5 trillion today. And this is very insidious because it has a kind of artificial wealth effect. It makes us feel richer than we actually are. So if you bought a house 5 or 6 years ago for £400,000 and today it's worth 600,000, you think you've made 200,000 profit. And Rachel thinks you have, and she'll tax you at 24% on that. The reality is, all that's happened is your property has kept pace with the rise in the money supply. Now, it got a little bit ahead of itself before the financial crisis. There was a real boom. You remember all those liar loans we used to use to buy property with? That all crashed and burned. And ever since then, the house prices have gone up in lockstep with the money supply. And it's exactly the same with the stock market. Yes, we think we've had a long boom, particularly in the American stock market, but look how it tracks the increase in money supply. The more dollars they print, the more it gets put into the stock market. You haven't actually got any richer. The reason, the only way you can determine if you're getting richer is to step outside of the fiat currency system and measure your wealth in something real. And the best way of doing that is with that 5,000-year-old real money, gold. So a great test of this is what's called the Dow to gold ratio. This is the Dow Jones Industrial Average Index divided by the price per ounce of gold. So that at the moment is about 42,000, and the price of gold, as you know, is at a record high, just over 3,000. So it turns out to be a 14.2, which is exactly where we were a few months before the Wall Street crash of 1929. So in essence, you could argue that we've gone nowhere in 100 years in real terms outside the fiat money system. And this is a great way of changing the conversation at dinner parties when your friends are boasting how much they've made from their properties. Ask them how many ounces of gold it would take to buy their house today and how many ounces of gold it would have taken when they bought the house. Then you'll find a very different you might not be very popular, but you'd have a very important conversation. Now, the US stock market, if you take a long-term view, it's averaged 7.4% net of inflation for 100 years. Now, that's a really good return. And if you've compounded that across 3 or 4 decades, you'll be doing okay. But be honest with me, how many of us have compounded the same investment across 3 or 4 decades without buying or selling at completely the wrong time? Most of us are not getting there. And the problem for me with my wealth gap was that 7.4% wasn't going to do it. I haven't got enough years left for a return like that to get me where I need to be for the lifestyle I want and the legacy that I want to leave. And it's even worse when you look at property. Over the last half century, British property has averaged just over 4% in real terms. Now that's no use to me. How long am I going to have to live? I mean, Jim Mellon's into longevity. I'm going to have to live to his 120 to get money from that kind of return. So that's no good for me. That's why I had to keep looking for something else, which is why I landed on private equity. So I put about 25% of my portfolio into private equity. It's now worth 50% because the prices have gone up. This is where all the value is being created. Companies are staying private for longer because going public is very expensive. There's a lot of aggravation, a lot of regulation. You have to report every 13 weeks on what you're doing. It's a real aggro. So the companies are either being bought out of the stock market. The London stock market is dying on its feet. There's less than half the number of companies there were a decade ago. They're constantly being bought out by American private equity firms. This is where you find companies that can realistically go up 3, 5, 10, 20 times in the next 5 years, in the rest of this decade. That's why I got into it. Now, this is a data from Cambridge Associates that shows the dark blue is the public markets, the light blue is private equity. And whether you look over 5, 10, 15 or 20 years, private equity massively outperforms. Now, these are the big private equity funds, and that's not what I'm talking about. I'm talking about direct private equity investment where you become a shareholder in a real company. And this is what the wealthiest, best advised people on the planet are doing. This is the most recent report on family offices of the ultra wealthy. They are allocating 22% of their net worth to private equity. Half of it into funds, half of it directly into individual companies. And that's because they know this is where the value is being created. Because remember, if you start with a great big portfolio, it's really hard to to move the dial. This is Warren Buffett's problem. Yeah, how do you, with something like Berkshire Hathaway, how do you find companies that are going to move the dial? So we have that same approach, but in the private, unlisted company world. At one end of the spectrum, of course, you've got companies like SpaceX. You may recall them rescuing those stranded astronauts recently. Imagine if you got into SpaceX in the early days when it was worth $100 million. Look at what it's worth today. And it's still private. Elon could go public, but why bother? What's the point? He wants to make long-term investments. You know, if a rocket doesn't work, he can afford to swallow that and move on. If you're a public company answerable to shareholders, it's much harder to make those kind of big, long-term investments. I'm sure you've heard of Peter Thiel. Back in 2004, he paid $500,000 for 10% of Facebook. He's done okay with that one. His holding's now worth $150 billion. That's a 300,000x return. Now, just to be clear, I'm not promising 300,000x returns. We don't need 300,000x returns, but that at one end of the spectrum is what's possible. One of the key points I want to make today is we're not suggesting you invest in 100 different companies. This is not a spray and pray approach. This is a Warren Buffett approach. We want to make 4 or 5 decisions, and obviously we want them to be good decisions, because that's where we're going to see that growth over the next few years. So let me give you a few examples of companies we've been recently raising money for, and a few that are in the pipeline, so you can see the specifics of what appeals to me. The first one is Glint. Now, they have turned real money, real gold, into everyday practical money. So I have an app on my phone. I buy gold which is stored in my name in the Brinks Vault in Zurich. And when I go upstairs to pay their massively inflated prices for a flat white, I tap this Glint MasterCard on the terminal, and in 200 nanoseconds, £4 worth of gold is sold in Zurich, converted into sterling, and the merchant up there is none the wiser. They don't know that's happening. Now, these guys, they already have about 150,000 customers. You've got 100 million of gold on the platform. We got in at a 65 million enterprise value. But what's really interesting is they are talking to 12 American states who are fed up with all the money printing of the dollar, and they want to have a state-backed, gold-backed currency. So you would have, it wouldn't be called a dollar, but it would be called a Utah coin or something. And the first of those states has now put $140 million worth of gold on the platform in anticipation of launching that currency. As soon as that happens, this company will 10x overnight in value, and it will become a multi-unicorn over the next few years. So that's one of the kind of radical, revolutionary technology companies that we like to invest in. The next one is TPX Property Exchanges. And we've got the co-founder of TPX in the audience today, Anthony. They've done the same thing, but with real estate. So now you can put 49% of your property, whether it's your home or an investment property, onto the exchange. It gets broken down into micro titles, which are full legal property titles registered on a blockchain land registry. And then so you can get liquidity. If you're a pensioner living in a home, you don't have to go for all those horribly expensive equity release products. You can just sell a certain amount of your property. If you're a young family looking for a home, you can buy one for 51% instead of 100%. And what's really clever about this, they've got this, what you might call the retail front end that I've just described, but then there's an institutional back end where the likes of a JP Morgan or a Goldman Sachs can put hundreds of millions of dollars in the platform to provide the liquidity you need to build a genuine global market. And there's a third part to this that I love. This thing here. It looks like an Olympic medal. It's actually a way of storing my property titles. And again, if I get really thirsty and want another coffee, I can go upstairs, tap the terminal, and £4 worth of real estate will be sold, and then the merchant will be none the wiser. And the added benefit of this is it was developed with billions of dollars of R&D from DARPA, the American Defense R&D organization. So this will withstand a nuclear attack. Now, I may be burnt to a crisp, but my property titles would survive me. So that's another piece of, in and of itself, I think this could be a unicorn. So we've got in a valuation of about 38 million just ahead of their London launch. Once that first exchange launches, it will triple in value. And once the network of 20 exchanges is built around the world, it will be a multi-unicorn. And then the third example I'll give you is AssetPass. This is a digital inheritance platform. Just think about how many of our assets are now held digitally. Obvious stuff like crypto, Bitcoin, etc. But there's a lot more than that. What about your medical records? What about all your usernames and passwords? What about your business? What about your intellectual property, your patents, your customer database? And what about just nostalgic stuff, photos and videos of the kids growing up? All of that now gets uploaded to a platform with military-grade security. You define who your trustees are, typically your lawyer, and you define your beneficiaries, maybe your children or your favorite charities. And when you go to meet your maker, it all automatically processes the transfer of those assets to the next generation. And I tell you, if you don't think this is a real problem, I went to one of the biggest will writing firms in the UK and said, what can I do about my digital assets, please? Because I've got this, and this. I mean, I've got digital art and all sorts of stuff. And they looked at me and said, oh, I'll have to speak to our legal department about this. And 2 days later, they came back and said, sorry, mate, we can't help you. You'll have to go somewhere else. The whole wealth management, will writing, legal industry is not ready for digital assets. So you need a platform that will do it. So these are also, they've got a very clever to-market strategy. They got accepted into the Google App Store and the Apple Store, where millions of things don't. But that's not their key strategy. They are partnering with the big system integrators like Capgemini, who are walking them into their strategic accounts, where they're going to sell tens of thousands of licenses at a time. So this one, we got in at 20 million. We think that's going to treble within the next 2 or 3 years. We've got 2 or 3 in the pipeline. First one is a Singapore company. I've been looking for a couple of years now at how to get into the Indian market. There's so much happening in India. A lot of very good, profitable startup companies, but I didn't really want to own an Indian company for governance and whatever reasons. So now we've got a company that's based in the leading financial center, Singapore, that owns already a piece of 37 companies between Singapore and India. They've got a fund in India, they've got an offshore fund in Dubai, and they're going to go into America. So again, we've got in it 20 million value, and we expect that to 5x within the next 5 years. There's a UK crypto platform that's a well-kept secret. They've been around a while, they've got 15,000 clients, and when you buy stuff on this platform, it immediately gets taken into cold storage. So you have none of these hacking issues that you have with some of the big American sites that you've seen in the newspapers. You're immediately in that secure environment. They have a unique FCA custodial license that the FCA said will not be granted to any other companies. And as Bitcoin becomes mainstream, this company is poised for massive growth. And we're looking to bring in some new senior management to really help get the marketing and sales going. So we think that one's a kind of one of these little sleepers that's going to become a big star very soon. And then obviously, you've got the whole world of AI. I mean, I'm someone who lost my shirt in the dot-com boom, and I don't want to do it again in the AI boom. So what I thought was, this is a really good opportunity for what I call a picks and shovels company. If you think back to the gold rush, it didn't matter whether each prospector found any gold because you made your money selling them the picks and shovels. This company goes into big corporations who are hopelessly behind the curve on adopting AI. It looks for where they could use AI for a quick win, and then they've got a pool of 70 different AI startups that they can bring in to address the specific needs. They've already done 150 projects. They've got 400 AI use cases. So we're raising some funding to all of that together into a technology platform and to take it into the American market, which we think will massively increase their value. 10 million that we can get that. Okay, the second thing I want to do in this talk is to talk you through my initial approach to due diligence. I get 3 or 4 approaches a week to raise money. That's 200 a year. And I do not want to spend a lot of time going through 200 companies. So I criteria I use to tell me whether for each of these I want to snog, marry, or avoid. And it's 7 what I call super success signals. So let me just take you through them very quickly. First one, does the company solve a real problem for real people in the real world? That might sound obvious, but you'd be amazed at some of the obscure things that come across my desk. So is it real? Are people going to pay for this? Is it actually going to work? And the second part of that same question, does it solve that problem using some kind of unique technology or intellectual property that can be scaled? Because remember what we're looking for here. We're looking for companies that can grow explosively, 3x, 5x, 10x. One of my companies looks like doing 100x by the time they IPO. So for that, there is almost always technology at the core of it. Is the actually ready? Are we investing in a prototype? Because what we don't want is another round, another round, another round. Every time they go out to raise more money, we as early investors get diluted. So I want to make sure this is not a prototype, it's not a minimum viable product, it is a working product out there in the marketplace without a lot more investment. What is the total addressable market? How big is this? Could it grow to be a unicorn if enough people want to buy this product or service? So that's a really key part. But no matter how good the technology is, at the end of the day, you're investing in people. And you could take the same technology and give it to this management team over here and this other management team over there, and these ones will become a unicorn and these ones will crash and burn. So it's really important. What do you think of the founders? What have they done before? What's their track record? Check them out on LinkedIn, check them out on Companies House. Are they students who had a great idea, or are they heavyweight entrepreneurs who've been around the block a few times and know what they're doing? Really important. Signal 6 is the already out there earning revenue. The number of times you kind of get that impression and then you dig a bit deeper and well, it's not actually quite out there just yet. I really prefer to make sure people are paying for it today as proof. And finally, how much skin in the game do the founders have? I want them lying awake at night worrying about what would happen if they failed. I want them losing their house and having to live on the street if this company fails. I want them working 18 hours a day. My future investment depends on them. So how committed are they? And you'd be amazed, some people grow up wanting to use other people's money for everything. I had one the other day cross my desk. There were 3 co-founders. They wanted me to raise £1 million for them. And when I looked in detail, they had put 100,000 into the company, so 33,000 each. Yeah, if you lose that, it's an ouch, but it's not going to change your life. And they wanted me and my members, my investors, to give them £1 million. I just said, no way, you go do it yourself. One of them owned a vineyard, one of them owned a fancy farm. I said, remortgage your business and do it. I'm not doing that. So how much have they got in the game? So if you're new to private equity, if you're kind of thinking, sounds a little bit interesting, I'm guessing you'll have a few concerns and questions on your mind. There'll be one kind of angel on the shoulder saying, whoa, let's get into the next, let's find a unicorn and do 10x or 50x. Then you've got the devil on this shoulder saying, well, hold on, you've made mistakes before. Who says you're going to get it right this time? Who can you trust? These are the kinds of concerns that led us to create Inside Investor Club, so that we could help to both educate people through coaching and mentoring to become confident private equity investors. And then we do all the hard work of finding the companies, doing the due diligence, deciding whether of our investors to make their decisions. So we're not a fund, we're looking at a handful of direct investments of the caliber that I've shown you there. We also do live events. Every month we have a member Zoom call where you can ask any questions about wealth creation or wealth protection. So as a thank you for hanging around, I've got a little gift for you. This is a book based on a series I did on Sky TV called Money and Me. I interviewed a whole bunch of people about their financial life stories, it's quite interesting. You learn some important lessons. There's fund managers in there's financial writers, there's celebrities. I hope you'll find that fun. I hope that's been useful, and thank you very much for listening.